Good afternoon, December the 17th, 2014. Time to wrap it up. Well, the Fed has spoken, and they didn't say anything that really wasn't unexpected. They changed the language from considerable time to being patient with the data. It was pretty much as expected. We started off the morning talking about how the market, the best trade to see, the easiest trade to see was failure to take out the overnight session high, followed by we wanted to get long because the tendency is to rally the market into the FOMC announcement. And we had our first buy this morning at 70. That was buy one. Our second buy was at 65. Our sells this morning were in the 85 to 90 area. And the first high stops at 81. This is the first time we really get into our sell zone, is up into here, and it doesn't produce much of a trade. What did produce a good trade was down here getting long in the 70 to 72 area, and you can just see all day long that the trade was from the long side, and then the news, the FOMC announcement hits and the market spikes up. This was a legitimate buy. We talked about that in the room to see if we could take out that high. When you don't take out that high, you need to exit that trade, so a break-even stop is, I mean, you're getting long to take out this high right here. Move your stop to break even, because if you don't get to the high, you're probably going to see a loss. And in the market, the software signals selling coming down. Yellen speaks, saying that everybody expects an interest rate increase sometime in 2015. Not saying she let the horse out of the barn, but most people do expect an interest rate. I mean, it's really not new news. Nothing is said. The Fed just reiterated what the market expects. So the Fed giveth, the Fed taketh away, and it's pretty simple. So here we sit, post-FOMC day. Will the stock market rally? And I think a lot of it will be dependent upon the price of crude. So when we take a look at the F1 screen, we have ourselves an inside day. I think the easiest trade to see is failure to take out this 2012 area. Inside days usually mean trading range, so we don't have a clear picture on this. The longer term picture is a B, and as long as we stay below this 2010-2012 area, the market is a sell. The attractor is down here at 68. The low volume number on the screen is our 1903.25. We visited that area before. The first little obvious support is this low, that low, followed by the low volume number. So 1956 to 1960 is pretty good support. And 2010, 2012 is pretty good resistance. So the F1 screen says trading range. The F2 screen, when we put it all together, it's an inside day. I guess if we did an E-split, you'd say that the market maybe slightly favors higher prices. Looking at this way, we probably have a little more volume in the top half, but you can see volume's riding pretty low in this distribution, and it's less than this volume right here. So the first sell is going to be 3 to 5. The second sell is going to be 9 to 11. On the buy side, our letting them get stops below that H period low. So we're going to put 84, 86, buy one, letting them test that low. And we're going to be back to our 75 plus or minus for buy two. Some news tomorrow, jobless claims, 292. I don't think anybody's paying a lot of attention to jobless claims anymore. We get used to these default numbers. Now the market will react to them, but won't really jump around. Philly Fed usually does cause a market reaction, just like Empire Index does at 26. LEI, no one pays any attention to because of the cost of money. Interest rates are so low. And utilities will factor in this too because of the cold weather And then natural gas inventories, I don't have the number yet, but everybody will be looking for a draw, a negative number. Inventories will be less than they were the preceding week, and it's the time of year that you would expect that. So that's it for the E-mini. Okay, looking at the note. The market sold into the Fed announcement all day long. You could see the heavy selling taking place on the note 3 pane, and the market is lower. So on this screen, we've got a lower high and a lower low. If the E-mini manages to rally overnight, the selling will accelerate on this. Tomorrow's news probably will not play. So the market rallied up, held all the way up, got ourselves a good run. Our buy early in the session did work. You had to pay up to get in, and we get a lower high right here. So this one points to lower prices tomorrow. We had a 15 to 19 sell. The high was 22.5 before the Fed spoke. After the Fed spoke, it was 27. But when the Fed says they're going to raise interest rates, you would expect futures to trade lower. And so there should be no surprise here for anyone. And that's, to me, that's one of the more comforting things about trading the financials. They just don't, if the news is bad, they sell. If the news is good, they rally. So we've got support here in the 28 area. We've got support over here in the 20 area. So stops below the overnight session low. So we put a 21.17 buy 1. May have to pay up to get in, depending on what the E-mini does into its close. And then a 13 to 9 for buy 2. Market is pointed lower, going to give it room to the downside on the sell side. Going to sell 3s to 7. If the E-mini is selling, we do not want to be short. Then 11 to 15 for sell 2. Was today's news unexpected? Nope. Was it out of line? Nope. But the Fed did say they would be raising interest rates sometime in 2015. Fed says they're going to raise interest rate, sell financials. This is not rocket surgeon stuff. Okay, the non-spread came in today. So you're expecting a selling market. And we want to be short this contract. Last rotate up was 03. 27, it's aggressive, but 31 to 03 is sell 1. 7 to 11 will be sell 2. If the E-mini sells, we do not want to be short the financials. 17 to 13 buy 1. Buy 2, 5 to 9. Has not been difficult at all to get to our number 2 levels because of the extra volatility associated with the note. I mean, with the 30-year. Okay, gold. I don't see that the Fed changed anything. They're still printing money. The current account balance was minus 100 billion. That puts us on a 1.2 trillion dollar deficit. Somewhere at a trillion is what it's going to be. Inflation is not a problem yet. When you get outside of food and the rest of the economy, energy's come down. So with the lower energy cost, we're probably not looking at inflation increasing. So it gets back down to how many dollars and euros will and yen will be printed. So I think we are going to trade gold a bit lower, but I don't expect the bottom to come out. We've been talking about 1085, 1100 is a trading target before the market can turn around. We'll see if we get there. So we've rejected prices below 85. 85 will be buy one, plus or minus. 75, 77 will be buy two. We'll give it some room to the downside. Don't expect it to get there overnight. The last rotate up on this market stopped at basically 1200. The spill was from 91. So 90 to 92, sell one. And then 98, 1200 for sell two. We're going to open it up a little bit. I don't see how things change. One of the things that we need to start watching is what will Russia's reaction be to the newly imposed sanctions. And I don't think Russia reacts like Western countries do to normal diplomatic pressure. I think it helps Putin in a way that the bad economic times that are coming to his country will not be blamed on him. And the oligopoly that he's formed with all of his henchmen, it'll be blamed on the United States and Europe, and that will help to enhance his power. The leaders find ways to get through this. If things really, really get bad, Russia can escalate tensions on its borders. Ukraine, Moldova, Finland's a possibility. I'm not saying it's going to happen, but it's just the quickest way to get attention pointed away from yourself to somebody else. All dictators use it, but things get tough in D.C., they use it too. Not as bad as wagging the dog per trade, but it's pretty bad. Okay, 57 is a pretty clean break in the market, obviously 60. As long as we stay below 60, I believe the trading target is 50. If we don't quite make 50, the market rebounds and starts up from that. The second day starting up could give us a pretty good short covering rally. I think this morning's assessment that we could be headed for 25 is probably a bit too gloomy, but these markets usually go back and retest the breakout from previous levels, previous trading zones, although it may take 10 years to get back and retest it. So 40 is a possibility also. But we don't have to predict the future. We can just join along for the ride. So we have a higher low, we've got a higher high. We come back down and we can't crack the 55 area, we can get long. If we come back up and we can't take out 59, we can get short. It's what this screen is telling us. And what a range we had today. So here we are at 56. We got volume at 56.42. That is the attractor. So 50 to 75, sell one. 57 even, 57 and a quarter. Picking up this area up in here will be sell two. On the buy side, good chance we won't take out the overnight session low. We extended the range up at 55 and again at 37 or 56.04. So we'll make 25 to 50 buy one. And then 54.75, 55 by 2. Okay, looks like the euro's back on track, fulfilling the desires of their central bank for lower euro prices. The Russian ruble started trading today, and I don't know if the Russian ruble will stop and the rest of it is behind what goes on in the euro or not, but they were coincidental time-wise when the announcements were made. So just a guess, not saying I'm right, but if the ruble starts to trade because Europe is the biggest creditor of Russia, that could bring some selling pressure back into the euro too. And last but not least, the euro. Okay, a big day in the euro, lower high, lower low. We're sellers. We like the short side of the market. We've rejected prices below 22.70. We're at 23.62. And looking at this screen, the spill from D period, that's basically at 124. We've got an M period rally to 85. We've got an N period at 70. So 70 to 80 is sell 1. And then 24 plus or minus will be sell 2. On the buy side, we'll make 20 to 30. Let them get stops below today's low, buy 1. And then I do like to trade against 23 plus or minus. It's a round number. It will bring in some short covering. Don't really like the long side of this contract. Because I think the long-term direction is lower. That's all it for December the 27th. I mean, how about the 17th? I will see you all bright and early in the morning, 6:45 a.m. Central. Y'all have a great evening.